given the current circumstances? Is it feasible for Tesla stock to reach all-time highs once again? How will they do that if it did? When is the right time to buy? In this video, we'll dive deep into the latest developments from Tesla, from their game-changing residual solar and battery storage solutions to their ambitious plans for humanoid robots. So grab your popcorn, sit back, and join us as we explore the electrifying world of Tesla and the future of sustainable transportation. But before anything else, make sure to like this video and subscribe to Tesla Stock News. In an unexpected turn of events, the company announced that it would not go below a 20 gross margin for its automotive division. However, reality hit hard as they fell short of this target in the first quarter itself. Tesla had assured investors that they would maintain this margin throughout the year, but with recent price cuts, the margin is expected to decline even further. The magnitude of the situation became a major concern. Some believe that lower commodity costs would offset the impact of the price cuts, but Tesla's results proved otherwise. They not only fell below their guidance, but also failed to meet the market's expectations. As a result, Tesla stock experienced a dip, leaving investors feeling uneasy before making any hasty decisions. It's crucial to consider insights from top stock expert Dave Ives, who revealed valuable information that could impact one's decision-making process. Turning our attention to Tesla, it seems like a situation that calls for more than just a cappuccino to handle. Well, it's been quite a challenging period for Tesla, facing pressure due to 6 price cuts. The company finds itself in the tug of war between maintaining margins and boosting unit sales. Although the stock showed signs of recovery earlier this year, it now needs to demonstrate sustainable growth in China, navigating through the ongoing price war and achieving a gross margin in the 20 range, excluding credits, will be the delicate balancing act for Tesla. While I believe the stock is oversold, it still has to prove itself in the second half of the year. Tesla's profit margin is gradually shrinking and is expected to continue on this trajectory in the coming months. Despite the optimism of many Tesla bulls, the truth remains that Tesla may not be as profitable this year as investors had hoped. However, there are a few potential bright spots to look forward to. If things go well, Tesla stock could once again soar, possibly reaching the $300 mark. The question is, how will the car company achieve this and what factors are necessary for it to happen? Let's explore this further. Some Wall Street analysts are concerned that Tesla's margin advantage could erode due to recent price cuts. Although the company did raise prices in the US earlier this month, it followed a series of global price reductions at the beginning of the year. Despite this situation, investors should focus on the bigger picture. With its ambition to become a mass market automaker, Tesla aims to pass on operational cost savings to consumers by maximizing market share and achieving economies of scale. Tesla could unlock significant cost savings in the future. This strategy has the potential to reward investors far more than a low-volume, high-margin model. Therefore, maintaining hope in the car company could be the wisest choice. The question that lingers is whether Tesla stock could reach all-time highs once again. While uncertainties exist considering the company's strategic direction, focus on cost savings, and ambitions for market expansion, it is not entirely out of the realm of possibility. As the future unfolds, we'll witness whether Tesla can overcome its challenges and propel its stock to new highs. If you've noticed, there's been a noticeable decline in Tesla stock. The I steer and drain trend, however, has caught the attention of savvy investors who see an opportunity to explore the company's other groundbreaking technological innovations beyond electric vehicles. What's even more enticing is the price at which Tesla stock is currently trading, far below its value just a couple of years ago. As of now, Tesla stock boasts a price-to-earnings ratio of around 45 compared to the broader stock market's Q's ratio of 19.2. This is a significant drop from Tesla's peak highs ratio of over 1,000 in 2021. While some investors and analysts remain skeptical, there's still much optimism surrounding Tesla's prospects. However, not everyone shares this sentiment. Recently, the stock experienced movement following a statement made by Mark Horton, the investor director at Game Investments. Horton boldly claimed that Tesla shares would never reach $300 again. He attributed this prediction to the company's price cuts for its EVs and anticipated decreased demand while simultaneously ramping up production. Horton's bearish view on Tesla has affected the stock's trading volume, which plummeted to 46 billion shares, well below the average daily volume of 171 million shares. If his predictions hold, investors may witness a further decline in Tesla stock over the next year. various factors are at play that could impact Tesla's performance. Concerns over inflation, rising interest rates, and the possibility of a recession have weighed heavily on the overall economy. However, despite these challenges, several positive aspects are working in favor of the automaker. One of Tesla's standout qualities lies in its profit margins, which tend to surpass those of its competitors in the industry. In 2021, the company generated an impressive $81.05 billion in total revenue, resulting in an operating income of $13.07 billion and a margin of 16.8%. This is notably higher compared to major U.S. rivals like Ford and General Motors, whose margins typically fall in the single digits. There are a few key factors contributing to Tesla's exceptional profitability. Firstly, the company's strong brand recognition eliminates the need for extensive advertising and promotional expenses. Additionally, Tesla's management has successfully implemented manufacturing efficiencies and vertical integration, allowing for in-house battery production and direct-to-consumer sales. These strategic moves have translated into improved margins and substantial profits for the company. Not only is Tesla a major player in the automotive industry, but it's also leading the way in artificial intelligence-powered self-driving software. This advanced technology positions Tesla to venture into the autonomous ride-hailing business by 2024. Early investments by ARK Invest suggest that self-driving cars could usher in a new era of ride-hailing, potentially generating a staggering $14 trillion in value by 2027. This further reinforces Tesla's position as an innovative force to be reckoned with. Tesla continues to make strides in the residential sector, providing solar and battery storage solutions to power homes. The demand for these products has surged in the first quarter, with battery storage capacity deployed increasing by an impressive 360% compared to the previous year. Tesla's production capabilities have gradually caught up with the demand, allowing them to meet the growing market needs. Additionally, in 2027, Tesla plans to introduce Optimus, a humanoid robot with applications in low-skilled jobs, particularly in manufacturing. The electric vehicle industry presents a significant opportunity, making Tesla stock an attractive long-term investment. As more electric vehicle manufacturers achieve scale, operating costs are expected to decrease, leading to increased sales. According to estimates by ARK Invest Management, global electric vehicle production is projected to soar from 7.8 million units in 2022 to 60 million units in 2027, representing an impressive compound annual growth rate of 50%. Coincidentally, this growth rate aligns with Tesla's production expectations over the years. Charging time for electric vehicles has significantly improved. Tesla highlights that 4 years ago, it took around 40 minutes to charge an electric vehicle for a 200-mile drive, but now it only takes 15 minutes. Moreover, Tesla aims to reduce this charging time to just 4 minutes within the next 5 years. These advancements contribute to the wider adoption of electric vehicles. While electric vehicles accounted for only 10% of new car sales in 2022, Goldman Sachs estimates that the figure could skyrocket to 61% by 2024. Despite facing competition from unprofitable rivals like Lucid and Rivian Automotive, Tesla's strategy of keeping prices low helps ward off potential threats. By focusing on maximizing long-term market share instead of immediate profit, Tesla aims to establish itself as a dominant player in the evolving electric vehicle industry. Government policies in the United States and Europe further support Tesla's growth prospects as they plan to ban the sale of petrol and diesel cars by 2035. Rising gas prices also make electric vehicles more appealing and convenient. Tesla recognizes its environmental impact and has taken steps to address it. In its most recent impact report, Tesla reveals that the mining of minerals and battery manufacturing accounted for 27% of its carbon emissions in 2022. Aluminum usage contributed to 18% of emissions, and steel accounted for 8%. The remaining 47% of emissions encompass downstream transportation and distribution, employee commuting, and business travel, as well as the use of Tesla cars. This marks the first time the company has accounted for emissions associated with its supply chain. Although electric vehicle supply chains currently produce more emissions than those of gas-powered vehicles, the lifetime emissions of conventional cars far exceed those of electric vehicles. While conventional cars continue to burn gasoline throughout their average lifespan of 17 years, electric vehicles emit 55 tons less of CO2 emissions over their lifetime, according to Tesla calculations Tesla plans to slash prices by 50% for its next-gen vehicles, as highlighted in its Investor Day presentation, and could support further price reductions while maintaining industry-leading profitability. While Tesla stock still has a long way to go before reaching its previous peak of $300 per share in December, it has been regaining lost ground in 2023 and could continue its upward trajectory throughout the year. What are your thoughts on Tesla stock reaching the $300 mark? Share your valuation of Tesla and stay tuned for the next video by clicking on the screen. See you there.